Afternoon, everybody. Welcome back to another one of our video live chats. Today we're going to be talking with Kyle Bryant and Kevin Rose with Market Street Partners. They're kind of going to walk us through the tax implications that come along with the COVID-19 outbreak. As usual, I'm going to leave the Q&A open from the beginning. If you've got questions, feel free to type it in there, and we'll circle back around at the end. Welcome, guys.
Yeah, thanks for having us.
Absolutely. Why don't you go ahead and sort of walk us through what the tax implications of all this are?
Okay. I'll start with just kind of a brief intro of where we are currently. So what happened, as you guys probably weren't monitoring the way that we were, but around March 15th, 16th, it seemed like COVID-19 got a little more serious, and we started hearing from the IRS about some misinformation. At first, they said they were going to delay any penalties or any payments that were due in April till July 15th, but everyone was still expected to file by April 15th, either for an extension or go ahead and actually file their return. So we were kind of scrambling around. Obviously this was a big inconvenience for us. We kind of pride ourselves on having technology, but still any disruption during this time of the year is a distraction. So we kind of went to a remote workforce. We were trying to continue along with the deadline, and then they announced that they actually extended the deadline to file until July 15th. And there were originally some limitations around that based on your income, how much you were going to owe, but they've fully taken that off. So basically April 15th, the usual deadline is now July 15th for all personal tax returns and C Corp tax returns, any partnerships and S Corps and flow through entities. And sorry if I'm kind of overcomplicating it. Those were due on March 15th, but you could still get a 6-month extension. So we've got time. Essentially, the IRS has given everyone a break. From there, all of the states started following in line, and thankfully Tennessee was one of the states that came in and extended the franchise and excise tax, the hall tax, which is your individual tax, and then most recently your gross receipts tax, which is tied to your business license. So if you're a retailer or have a local business, then that deadline has been extended, which is normally April 15th, but also pushed to July 15th. Looks like Georgia, we may have some Georgia businesses on here as well. It looks like those were also pushed till July 15th. So the states luckily all kind of jumped in line with the IRS's kind of guidance and direction. To my knowledge, I don't know, Kevin, you may know of some other kind of random states that haven't taken this approach, but all in the Southeast region that I've seen have.
Yeah, I think most states have kind of fallen in line. There's some early adopters, California, New York, those types of folks. But yeah, most of the most of the clients that we deal with, the states have pushed back the filing deadline. And so, everyone has in their mind April 15th is the due date. That's, really April 15th this year doesn't mean anything. It's really July 15th at this point. So yeah, the tax deadline for most companies is going to be July 15th at this point. That not only has to do with tax filings, but a number of self-employed folks, they make quarterly tax payments. And so your first quarter 2020 payment in the past was always due on April 15th. This year it's not due until July 15th. Currently, so typically the first quarter is April 15th. You have a second quarter payment that's usually due June 15th. To my knowledge, that's still the case.
Yeah.
So this is a very unusual. So your second quarter payment is due June 15th, but your first quarter payment isn't due until July 15th. So that's the way that things are currently constructed. Totally nonsensical. We'll wait to see if that June 15th deadline gets pushed back or not. But anyway, obviously very unusual set of circumstances, and with that unusual, not a typical tax season, I guess. So really April 15th has no meaning at this point.
Yeah, and that's kind of the standard for where we are. There is, with the new stimulus package, and this is not a stimulus package webinar, so we're trying to stick kind of to the subject matter here, but there is kind of a weird nuance, I guess, with the stimulus checks coming out. I'm sure everyone is aware of the individual income levels of, if you're filing single and you have under $75,000 of AGI, adjusted gross income, then you're going to get a stimulus check. Or if you're married filing jointly and under 150 $1,000 in AGI, you're going to get a stimulus check for $2,400. So the question we're getting constantly now is, okay, so what is that based on? If I haven't filed my 2019, that's not due till July, will they take my 2018? So the way what we're seeing is if you haven't filed your 2019, they're going to look at your 2018 AGI and make the payment based on that. If you have filed the 2019, they're going to take it based on that. And if you end up qualifying in 2020, if you didn't qualify off your 2019 or your 2018, they're going to make you whole on your taxes in 2020 through a credit. That's the way I interpret that now. That 2020 making you whole in the credit, that's not set in stone. I don't think that's been officially announced, but when they did the stimulus checks back in 2008, that was how they handled it. So I would assume they would follow suit with that as well. Kevin, does that kind of follow?
Yeah, no, that jives with what I understand things to be. I have not had the opportunity to really look at the credit piece either, but that's my understanding is that's kind of has not been set in stone up to this point.
Yeah, just the reason why there's a little confusion is we're getting updates. I mean, honestly, sometimes up to the hour. It's been kind of a crazy last few days with Congress forcing this bill through and then kind of the rules. It feels like we're kind of making up the rules as we go. They left it vague enough where they had some flexibility in certain things. So we're trying to interpret those as fast as we can. There are a few other kind of tax pieces that came down through the stimulus package, especially in the second one related to FMLA and paid time off. So I'd encourage you, if you have employees that have either contracted the virus, are being forced to quarantine based on a medical profession's advice, or they're having to stay home with their children because they're not able to, obviously they're not in school or able to attend their daycare now. There's a provision where you can go to your employer and request FMLA, or you can take paid sick time as well. And there's a payroll tax credit that is going to be applicable to the Social Security portion of your taxes that you pay on your payroll taxes quarterly. So that's kind of one of the weird nuances. There may be some questions around that. We'll be happy to answer as best we can. So that, and then there were some other kind of tax rules. I've got them written down here that came out with this most recent stimulus bill. There is, I guess, kind of the three biggest pieces to it is there's also a provision where, as an employer, you can delay payment of your 2020 payroll taxes until 2021 and 2022. That is going to be a loan. That's just kind of a delay, kind of to help bridge the gap on the cash flow. There was another provision where businesses are on their corporate returns are going to be able to carry back losses from 2018, 2019, and 2020 to the previous 5 years. That's a big change and could help people get a bigger refund in this year. And then there's another qualified improvement property, which it's a big kind of change that we probably won't get into unless there's specific questions around that. And again, that one's kind of one that is up for debate or kind of interpretation at this point. We haven't gotten the final ruling on how that's going to work. But if there are questions around that, feel free to ask them, or shoot us an email. Our contact information is available on our website.
Yep. And those are some of the bigger business tax provisions that are out there. Certainly they're all taxpayer favorable at this point, just given the current state of affairs. From a personal standpoint, people that are age 70 and a half and they have retirement plans, they're required to take what's called required minimum distribution, which is basically a way of they access funds from their retirement account. It becomes taxable at that point. So that becomes a requirement once someone turns 70 and a half, and they have to do that every year based on the value of the retirement account. Well, temporarily, that requirement for 2020 has been waived. So that's a big deal for some of the retired folks out there that, are going to have to take those distributions or were anticipating having to take those distributions. They no longer have to do that. So that's certainly a big deal. Cal kind of touched on the ability to take. So say someone's filing a tax return this year and they have a loss on their tax return. So they're, they didn't make any money, they actually lost money. So the way things stood previously is that loss, you could carry that loss forward and apply that against your income in future years. Well, one of the changes here is what you can do is you can take that loss and carry that back 5 years. And so that's applicable for for corporations, but it's also applicable for individuals as well. So that could potentially be a big deal for someone that had a down year, this year, or maybe they had a down year in 2019 or a down year in 2018. It's a way for them to get more cash in hand via tax refunds. Another thing, let's see. So there is typically what happens is you can't access your retirement funds until you turn 59 and a half. Well, there's a provision in here whereby you can qualify for so if you do access your retirement funds before you turn 59 and a half, you're going to get hit with a 10% penalty typically. Well, there's a provision that allows for waiver of that 10% early withdrawal penalty. So that's a big deal for people that are having liquidity issues, which a lot of people are or will. So that's a way for them to access their retirement funds without getting hit with this additional penalty on top of the income tax. So that's something that's taxpayer friendly there as well. And I don't know if that sparks any questions or.
Probably not the best idea to take your retirement funds right now.
I agree.
Obviously, we're not financial advisors, so I'm not giving you investment advice, but I would encourage you to kind of everyone knows the state of the market right now, and you just don't want to be taking money out, especially if you're younger and kind of in it for the long term. Well, I guess even if you're approaching retirement age, you don't want to be doing it either, but especially, that is helpful, I guess, if you get in a bind, but I would put that at the last kind of stop.
Absolutely. Yep. Yeah, you definitely want to exhaust all your other resources before tapping into retirement because for a number of reasons. I agree 100%. Yeah.
All right, thanks, guys. We've got a few questions. If you want me to go into those now.
Sure.
We'll start with an anonymous user asked, is the LLC annual report still due today, or can it be delayed?
That's a good question. We have not seen that has been delayed. That comes from the Secretary of State, so it's not one of the normal tax. It's not the Department of Revenue. I will say there's no penalty for late filing your annual report. You'll get a notice in the mail asking you to go ahead and do it, but it's just kind of one of those things. You got to pay your $300 to the state. So I would go ahead if you can go ahead and do it now. But again, you're not going to be penalized if you do it late.
Yeah, I haven't seen anything pushing that back, but like Kyle said, even if you are late doing that, there's no penalties, and I think they'll reach out to you, so there's no downside, I guess, if you don't have the $300 to pay right now. But if you do, I'd go ahead and get it done.
Don't go get $300 from your retirement account to pay that.
Good advice.
Okay, so the dog ate my homework excuse works on that one. I started a small retail retirement business in 2019, cutting my 2020 gross in half from 2019. My 2019 gross will be about $75K. Will I be able to receive the $1,200 stimulus?
Assuming you're single, the $75,000 is the cutoff. It also, you're still going to get, so the stimulus phases out, so it's 75. It's not an all or nothing. If you go over, I think the cutoff, I've got it in my notes here, is 99,000. You'll get fully phased out, but you should still get some. But if you think, I guess if you've already filed your 2019, then there's nothing really to do. But again, if you're disqualified in 2019 and then you qualify in 2020, the way I understand it is you're going to get reimbursed through a tax credit on your filings in 2021. So hopefully that helps.
Yeah, I think that actually brings up another question. So if you're in the reverse situation where you filed 2018 obviously, but you haven't filed 2019 yet, and 2019 would put you in a situation to maybe get more of one of those stimulus checks. Do you guys know how long you have to get that filed before those checks get cut to have it count?
Yeah.
We don't.
Go ahead, Kyle. Go ahead.
We don't know. We've actually been in that situation. We've had clients that have had events in 2018 that would have disqualified them. So we've encouraged people to now is the time kind of to hustle to get your taxes filed. I don't know when they're going to say, okay, this is the cutoff, but they haven't said that yet. So I would encourage you to go ahead and get that done.
Yeah, I'd get it done. I mean, if they're already, you know how the government works, it's like steering an aircraft carrier. So if they've already started down the road of issuing these refund checks and they're basing it on what they see now, and you go ahead and hustle and file your 19 return, who knows which tax year they're going to use? I mean, I certainly don't. So it'll be interesting. I know they're trying to accelerate and expedite the payment of these checks, and so, you know, I'm not sure what that'll ultimately end up looking like, to be honest. But if you are in that case,
and they haven't said when those are going to go out, right?
They're supposed. Go ahead, Kyle.
They said they were supposed to. They said direct deposits were going to start in the next 2 to 3 weeks. Is that what you were going to say, Kevin?
Yeah, I was going to say the next 2 to 3 weeks. So if you're in that position, I'd go ahead and try to get that 2019 tax return filed. You know, and hopefully you get in the queue to get your refund check that way, or get your stimulus check that way.
Okay. That sort of brings up the last question over here, I guess, which is, I know this is a hard one.
Kevin, you're up.
Things are moving so fast. It's really difficult to be a prognosticator these days. But do you guys foresee more changes coming in the near term?
Personally, I do, especially when you hear, you know, and that we were talking about this before, I guess we came live online. I mean, my expectation is that you're going to see something else come down the pipe with the further and further that this thing potentially gets pushed out. You know, I know at one point hoping for mid-April. Now it seems like, you know, end of May would be optimistic. So the further and further that, you know, that this pandemic or this issue continues to be an issue, then the more likely that the government, the Fed, Treasury is going to have to do something to stimulate the economy and allay people's fears. And the only way to do that is, you know, through some kind of financial package or some kind of financial relief. So my personal expectation is something else will be coming down the pipe, because you know, it just sounds like, unfortunately, that this is going to continue for, you know, a period of time longer than I think anyone would hope for. And so with that, got something has to be done to help people out, and, you know, and that's really the only way to do it. That's my personal opinion.
Yeah, I did read last night that there's talk in Congress now of a phase 4 of the stimulus. I thought phase 3 was going to be the end, but it sounds like they're already talking about phase 4. I made a joke last night that it feels like we're on the Fast and Furious movies. We're going to be at, you know, phase 8 by the time this is all done.
Yeah. Hopefully not. This is a bad movie. I would turn it off for sure.
Okay. I think that covers all the questions I had. I should have done this up top. But can you guys tell us a little bit about Market Street Partners? If folks haven't caught on yet, you guys are a CPA firm. But can you tell us a little bit about what you do, what your specialties are, what types of clients you work with?
Sure. Kyle, you want to go ahead?
Sure. So we started in 2016. We kind of had a large group of the startup clients in Chattanooga, a pretty good roster of names you would probably know and recognize. And we started there. And then since then have kind of grown into this, just kind of by demand, have started working with a lot of small to mid-sized businesses. You know, our kind of claim is we are more affordable than a lot of the bigger firms, but we feel like our expertise, you know, we've got a good team in place and we've got a lot of expertise among us, so we might have a little bit more resources than a solo CPA firm, but so we can kind of fill a missing gap that we felt like was in the community. But you know, we try to be proactive and professional, and that's kind of our 3 Ps: proactive, professional, partners. We try to partner with you and help you navigate things like this. You know, I think we jumped on this pretty early, and we've been able to help our clients a lot. Right now we're spending a lot of time navigating through the SBA loans and the emergency grants and things like that. So a lot less this day, in this time period, a lot less compliance work and more like consulting and advising. And that's where we really think that we add value, because We've got, like I said, kind of diverse backgrounds all coming together to help.
Yeah, I would, go on to say that, basically mid-sized full-service CPA firm. We do tax, business. We do some personal stuff. Kind of our core client is, small to medium-sized business. Work with the business, then also work with the individual owners as well. I think we got a unique perspective on things as we advise our clients, business owner clients, individuals, because we ourselves are business owners as well. So it's easy for us to step in the shoes of our clients, and they have a lot of questions, a lot of concerns about, some of these the stimulus package. Do I qualify for some of these lending programs? Do I not? We're going through the same calculus, the same process, and so it's easy for us to step in those folks' shoes and kind of see things through their lens, which I think not everyone is able to do that. So I think that's a big differentiator for us, and something that we absolutely enjoy doing, and and I think something that we're good at as well. So.
Okay. Thank you guys so much for doing this. If people have other questions we didn't get to address here, or if they're just interested in acquiring your services, where would they go to get in touch?
I think our website's going to be the easiest. It's marketstreet.partners. It's got all our contact information. We're also any social media platform, LinkedIn, Facebook, Twitter. You can reach us there as well.
Yeah, it's marketstreet.partners. There's no .com. There's a lot of questions on that early on. It's like, you mean marketstreet.partners.com? It's just marketstreet.partners, no .com. So, yep.
Okay. Thank you guys so much. Hopefully this has been a huge help for a lot of folks.
Yeah.
Yep.
Thanks for having us.
We appreciate you guys. Yeah. Thanks a lot for having us.